Sure. Thanks, Adrian. Thank you guys for attending today. I'll talk about kind of the legal basis for drop shipping rules without hopefully devolving into a law professor kind of dissertation on this stuff. It's fairly dry, but I think it's important for folks that are either utilizing a drop ship arrangement in order to complete their sales, or folks that are fulfilling orders, fulfilling the role of a drop shipper, to understand some of these basics. And I'll work through these. Like Adrian said, if you guys have questions or something, please speak up virtually, speak up, and we'll try to answer them as we go if there's something that you guys would like some clarification on. So today we're going to talk about what is drop shipping for sales tax purposes, and that it sounds kind of pedantic, but it's important because in my experience, I've run into many different arrangements that folks call drop shipments, and that's all well and good. And for purposes outside of the sales tax realm, that's probably the most apt description for a lot of these arrangements. But for sales tax purposes, for sales tax compliance purposes, a drop shipment is a very specific type of transaction, and I'll walk through that. And if it's putting you guys to sleep, then let us know. But I think it's important that before we spend too much time going into the details of complying in a drop ship transaction, that you guys understand when the sales tax auditor talks about a drop ship arrangement, what they're talking about, and how the sales tax world in general, although fairly consistently across the many states, views a drop shipment arrangement. Then I'll talk about who needs to collect and who doesn't. Believe it or not, we'll end up talking about Nexus before it's all over, which is not what you guys may have envisioned when you signed up for a drop shipping webinar. But that's actually the core legal concept that work here that creates some of this diversity between the states and how drop ships are handled. And of course, when we have, it's like anything else in sales tax or any kind of multi-state tax compliance, the states all tend to find their own path, and occasionally they all end up at the same place, but more often than not they don't. So we'll talk about some of those differences, variances, not necessarily with the idea for you guys to be able to recite a list of states that do this or do that, but mostly to give you a general idea of, hey, these are the things that I need to look out for, whether I'm using a drop shipper or I am a drop shipper. And we'll have plenty of time for questions. And like Adrian said, just please speak up in any time. And she is completely has my permission to interrupt, and we can get to your questions. So let's talk about this stuff. There's some terms here that really are terms of art in a drop ship arrangement. I prefer these three terms: the vendor, the third party, and the customer. Now, I've seen the vendor and the third party referred to as a distributor and a manufacturer. I always see the customer referred to as a customer, so that's not too confusing. But let's talk about what these are. The vendor or the distributor is the retailer of the item. Vendor is a sales tax term that describes the person or the entity, the legal person or entity that's making the retail sale. So I'll use an e-commerce hypothetical as I work through here, and I'll try to follow it along, and hopefully it's helpful to you guys. So if I'm out here in Edmonds, Washington, and I am in Seattle, and it's freezing today for Seattle. It's like 27 degrees, and all these Northwesterners are just frozen. So it's like a winter block freeze up here, and it's funny as hell because it's really not terribly cold. But anyways, I'm up in Edmonds and I'm freezing my butt off, and I've got a little e-com company in my garage. I'm selling widgets. But widgets are pretty big and widgets are pretty heavy, and I don't have a lot of room to store a bunch of widgets in my garage. And frankly, most of my customers, or maybe all of my customers, they're spread all around the U.S. I don't just sell widgets to my neighbors in Edmonds. I sell widgets all over the country, maybe even all over the world. So for obvious reasons, I guess everyone now is, particularly with the Fulfillment services provided by our buddies over in South Lake Union, otherwise known as Amazon. I think more and more people are aware of these types of arrangements. So I'm going to take advantage of it. I'm going to have my third party to this transaction, my manufacturer, they're just going to ship the stuff, to my widgets directly to my customers. Why do I need to keep inventory anymore? My third party, my manufacturer, or whatever you want to refer to them as, they're willing to package the stuff up and send it directly to my customers. I save on freight. I save on square footage. I don't have to store the stuff. I don't have to worry about inventory becoming obsolete. I mean, it works good for me and it works good for my third party. The customer, of course, is waiting on the other end for the widget. And frankly, the customer doesn't care where the widget comes from about 99.99% of the time. The customer just wants their widget. Okay, there's the players. Now, I guess I kind of covered this here, but we've got slides on this. This is so important. This is tax geek stuff, 100% here. But yeah, this is the vendor. This is the retailer. Accepts the order from the customer, places an order with a third party, directs a third party to deliver the item to the customer, and bills the customer for the item. In the e-com world, that billing may happen on a shopping cart. It may, in the old school, I might send them a bill in the mail or something in the middle. But I'm going to, as a vendor, I'm going to collect the money. I'm the retailer for purposes of sales tax law, right? Third party accepts the order, delivers to the customer. If they don't bill the customer, they bill me. And maybe if they are an old school manufacturer of widgets, I get that in the mail, maybe even just once a month. But they're billing me wholesale for those items that are being shipped to my customers. I know this is basic stuff, but let's get these terms down so as get into the more convoluted setups. There's no confusion on who's who, okay, guys? I appreciate you being patient with me, but I think it's important. And then, of course, the customer, this is the obvious one of the three, places the order, pays the vendor, right? Orders from the vendor, pays the vendor. The thing comes in the mail, and the return address on the widget is some manufacturing company on the other side of the country or the other side of the world, and the customer, frankly, doesn't care, right? Okay. Just remember, the third party is the one making delivery to the customer. That doesn't mean that they have to put it in a UPS truck and send the widget to the customer. Just to be clear on this, right, guys? The customer may be able to go and pick up the widget right at the manufacturer's shipping dock. The third party / manufacturer may deliver the widget in their own truck. If that delivery takes place between the third party or manufacturer, whatever term suits you, and the customer. In a sales tax world, a drop shipment is not an item that me as the vendor back here in Edmonds, Washington, in my little e-com website in my garage, I don't touch the thing. I don't handle the widget. I don't deliver anything to the widget to the customer besides a bill. If I'm the vendor up here in Edmonds. Deja vu. You can see how important we think getting these terms across is before we get much further on this presentation. So there you go. The seller is the vendor. The third party is the drop shipper. They're the ones that are providing the item to the customer. The customer, of course, just wants their stuff, his or hers. I'll have to make sure that I get gender neutral on that slide. Okay, so now we're cranking up the the complexity just a little bit. We're still only about a number 2 on a scale of 10, but so now we're going to talk about the actual transaction. Remember, guys, this is what I mentioned earlier about the nature of a drop shipment for sales tax purposes, right? This is it. This is when you read about drop shipment rules in the sales tax realm or you're concerned about complying with them, this is the arrangement that these rules are designed to handle. And there's 2 sales under this model. A sale from a vendor to the customer, that's the sale that I make, my e-com company bills my customer retail price for the widget. And then there's the other sale, the wholesale sale. Sale from the third party, the manufacturer, to me. Now, I mentioned Amazon fulfillment a few minutes ago, and I did that on purpose because you will notice that this description here does not describe fulfillment by Amazon or fulfillment by anybody else. Under an Amazon fulfillment arrangement, typical one, the items, objects that are being sold and delivered by Amazon, or via their trucks or drones, they're my inventory under a fulfillment agreement. That is not a drop ship for sales tax purposes, guys. There's compliance issues around a fulfillment agreement. But a fulfillment agreement, at least a traditional, typical one, I guess they could be traditional. They've only been around 10 years or so, but we're learning more and more about them. That typical fulfillment agreement, fulfillment arrangement, is not a drop ship for sales tax purposes. And I just want you guys to keep that in mind. And that's one of those areas where I mentioned that in my experience, I've come across all varieties of arrangements to get people their stuff that folks refer to as drop shipments. And for sales tax purposes, you're going to get tired of me saying that, you probably are, but that's part of the theme today, guys. For sales tax purposes, this is a drop ship, and this alone. It's the two sales. It's a retail sale that I make as a vendor from my little e-com garage outfit here in Edmonds to the customer in, where are we going to put the customer? How about Boca Raton, Florida? And then there's the sale that my third-party drop shipper is making to me, the wholesale sale. Hopefully I can squeeze a little markup out of this deal for all this paper and widgets moving around. And that's a separate sale. It's a separate transaction. And if you're thinking about from a sales tax point of view, the real question is, what's the tax treatment for each of those sales? Nexus, believe it or not, guys, is the underlying issue. And Nexus, and here's Nexus 101, but it's important. This is an important concept, guys. Nexus describes the contacts or activities that your company has with a given state. So, for example, in Washington, I'm here in Edmonds. I think everybody intuitively appreciates that I have Nexus in Washington. I am obligated to collect sales taxes on the retail sales that I make in Washington. Why is that? Well, because I exist in Washington. I take up physical space. I'm registered with the Secretary of State. I file my taxes here. Hopefully, if I'm fortunate, I actually pay myself a little bit here. I've got a bank account. I've got insurance. I think people intuitively understand the connection that a business has with the state that it exists in. The real question is, where else do I have Nexus? Now, for my e-com company, going forward with our hypothetical here, guys, we're going to assume that I don't have Nexus anywhere else, right? I'm a one-man show. I don't travel. I don't go to trade shows. I don't keep inventory of my own anywhere. I don't do any banking. I don't have any employees, no independent contractors. I don't have any salespeople on the ground, even jobbers, that might carry several lines. I don't have any contacts or activities outside of Washington that would obligate me to collect. So the question that we'll get to and we'll answer before we're done today is, how does that alter my compliance? Now, if I'm a drop shipper, and maybe I'm a drop shipper in, let's see, how about Richmond, Virginia? I'm a third-party drop shipper, and I make the widgets that the vendor up in Edmonds sells, and I ship them around. Intuitively, everyone understands that I have Nexus, at least the third-party manufacturer. Let me not confuse you too much with all the I's and the he's and the she's. The third-party manufacturer in Richmond, they have Nexus in Virginia. They exist there. They have a plant, a facility. They have employees. They make payroll. They have bank accounts there. They're registered with Virginia Secretary of State. They file taxes in Virginia. So in our hypothetical, we've got a seller who has Nexus in Washington and a third-party provider who has Nexus in Virginia and maybe other places too, and we'll talk about that as we go through it. The reason for the Nexus 101 talk, guys, is because this is the key in answering those questions that I posed just a few seconds ago, which is, of those two sales, the one from the vendor to the customer and the one from the third-party drop shipper to the vendor, which one, if any, of those two sales, is there an obligation to collect sales tax? And Nexus has a lot to do with it. And hopefully I can walk you through this and give you guys at least a cocktail party level of understanding about how this stuff works. So as you're sitting around with your stakeholders, your clients, whatever situation you're in, you can kind of get the conversation started and ask the right questions when you're trying to build a sales tax compliance solution when there's drop shipping involved. We'll see how that goes, but I'll give it a shot. One thing that I wanted to mention in terms of Nexus, and I'll use this hypothetical as an example. And this slide I'm shifting gears a little bit on you guys, but this question comes up all the time, and I want to just get it off the table right now. My e-com company in Edmonds, Washington, utilizes the third-party drop shipper in Richmond, Virginia. That relationship alone, in and of itself, does not typically trigger Nexus. That means my e-com company in Edmonds, Washington, under most circumstances, does not have Nexus in Virginia just because I use a third-party manufacturer to ship goods to my customers from Virginia. Shifting gears a little bit here, guys, but this question comes up, and I want you guys to be aware of that. And I think it helps to, when you imagine this in your head, it helps to understand a little bit how Nexus works. The reason that I don't have Nexus in Virginia is because typically these arrangements, that's what makes a drop shipping arrangement elegant in some ways, right? I don't have any stock there. I don't have inventory in Virginia. I don't have salespeople in Virginia. I don't have people who box up widgets and put them in UPS trucks in Virginia. My third-party manufacturer, well, they're not in the business of selling widgets to retail customers, so they don't refer anybody to me. I don't have any other contacts with the state of Virginia, so I just want to clear that off the table, okay, guys? That arrangement alone doesn't create an obligation for me in and of itself to collect on sales made in Virginia, whether they're drop shipped or not. And hopefully I'll tie this together as we work through this, and you'll understand, I think, a little better of the concept I'm getting at there. So let's get back to these two sales. And now we're going to interject Nexus into this, right? We're going to interject, where is the vendor, in this particular example, where's the vendor obligated to collect? So back to my hypothetical. I'm up in Washington. My third-party drop shipper is in Virginia. My customer is in Florida. It makes a lot of sense for me to have my widget shipped from Virginia to Florida than to have the widget shipped to Washington for me to ship it back to Florida. That's why these arrangements work, right, guys? Okay, here's our first scenario. These slides from now on are particular fact patterns, and I'll walk through them with you, and hopefully it's useful. So first example is kind of a simple one, and that is, what if my e-com company, now I'm altering my hypothetical a little bit, so follow through, because these all represent a little bit of factual changes. So let's say perhaps my e-com company, I hire a independent contractor web designer from Florida, and I pay her a couple $1,000, and then to set up a website, and then every quarter or so I pay her a couple $300-400, or I'm a pretty modest little e-com company, and she updates my website and puts fancy little widgets on there and makes sure my shopping cart. You guys know what I'm talking about. So I've got an independent contractor in Florida. What that means is, guys, is my e-com company, my little tiny e-com company, has Nexus with Florida. I've got an employee there, even a 1099 employee, an independent contractor. This fact scenario describes that. Now, because I've got an obligation to collect in Florida, the transaction, the first transaction, the sale from the vendor to the customer, from me to my customer, that's subject to Florida sales tax. Now, we're not going to talk today about whether or not my widgets are taxable or not. We'll just assume they are, okay, guys? My widgets are taxable everywhere. Because I have Nexus in Florida and under this factual pattern, I'm obligated to collect sales tax on the retail price that I charge my customer. The drop ship sale is simply a wholesale sale. Because I am a registered vendor in Florida, I can issue the supplier an authentic, valid Florida reseller's exemption. So when the vendor makes the the third-party manufacturer makes the wholesale sale to me as a vendor, I present them with a resale certificate, and they don't charge me any sales tax. So sale number one, from the vendor to the customer under this fact scenario where the vendor has Nexus in the customer state where the customer is, I have to charge them sales tax, period. It doesn't matter that the drop shipper is involved at all, really, because I have an obligation to collect in Florida under our hypothetical. So this is a drop ship without any drop ship rules. This is a simple one. This is kind of a simple one too, but it's a little more esoteric, and hopefully I've got you guys ready to grasp this one. So under our hypothetical setup, we're altering the fact pattern again. As a vendor up here, up in Edmonds, I don't have Nexus in Florida. I like we mentioned before, I don't have any activities there. Come to find out, my drop shipping third party, they have no Nexus in Florida either. All they do is make deliveries into Florida. They have no salespeople, no independent contractors, no affiliated businesses. Neither one of us has Nexus in Florida. It's another easy one. No one collects sales tax because neither one of us are obligated. Somebody's obligated, and we won't talk too much about that today, but the consumer's obligated, right? Consumer's obligated to remit use tax on the price of the widget in Florida. Probably the most evaded tax in the United States is consumer's use tax, but it's not my obligation as the vendor to collect it and remit that tax. Neither is it the obligation of the third-party drop shipper to collect or remit that tax, so long as neither of those two entities have Nexus in the state where the customer is. Supreme Court says if you don't have Nexus, the state can't obligate either one of us to collect and remit those taxes. Florida law says that the consumer must remit use tax to the state of Florida, and we'll just leave that up to the consumer, not our problem. And this is where it gets a little complicated. I don't know about complicated, but yeah, I guess a little complicated, right? So let's go back to our hypothetical. In this case, I'm the vendor up here in Edmonds, Washington. I have no Nexus in Florida for this hypothetical. However, based on this fact pattern, my third party drop shipper, they do have Nexus in Florida. They've got another manufacturing plant down there in Jacksonville. They are all in Florida. They have physical presence coming out of their ears. So they have sales tax Nexus in Florida. The sale is going into Florida. Because the vendor, me in Washington, is not able to issue a valid Florida exemption certificate because I'm not registered there, a drop shipping third party is going to need to determine whether or not Florida, the state of Florida, will allow them to accept an out-of-state exemption certificate, maybe one from Washington, that's where I am, or even a multi-state tax commission exemption form, which are accepted by a majority of the states. If Florida is one of the handful of states, and we'll look at these lists in a little bit, but conceptually, I want you to understand this. Don't worry about the states other than to help you keep track of this hypothetical. If Florida is one of the handful of states that will not accept an out-of-state exemption certificate, nor will accept a multi-state tax commission exemption certificate, we've got a little problem. First of all, if Florida will accept my Washington certificate that I present to the drop shipping third party, then that's fine. The drop shipping third party can wholesale me the items with no sales tax based on the presence of that form. I make the sale in the Florida, the retail sale, but I'm not obligated to collect. Again, the consumer is obligated on the use tax. However, if Florida is one of those handful of states that says, no, we only accept our exemption certificate, what's going to happen? Well, from the sale from me to the customer, I still have no nexus there. The vendor in Washington is not obligated to collect tax on the retail sale. However, the third-party drop shipping vendor may be obligated, depending on what states we're operating in, may be obligated to collect and remit tax on the wholesale sale, that second sale in our two sale transactions that we're talking about today. Well, I'll reinforce this as we move along, but that's the key, guys. That's what 25 minutes of building up to this has been all about. That's the key, knowing where you're operating and whether or not the states that you're making sales in, or if you're a drop shipper, the states that you're making deliveries in, what is the nexus status of the parties? Who is obligated to collect and when? And if a vendor, a seller, is registered in a given state, they can issue a valid exemption form from that state because they are registered. But if they're not registered, a vendor who is not registered in Florida, for example, can't issue a valid Florida exemption certificate. Well, they can print one online and they can fill out all the boxes, but it's not valid. They're not a registered vendor. That exemption form isn't worth the paper it's written on. About 33 states, roughly, will allow a third-party drop shipper to accept an out-of-state exemption certificate. So that means in our hypothetical, if Virginia was one of those states, then they would accept my Washington exemption certificate. Or they would, because I can issue a valid Washington cert, I'm registered. Or a multi-state tax commission form. You can Google that. It's not a government entity, a not-for-profit entity that's been out there for years. Multi-state tax commission. It's a voluntary organization of state revenue authorities, and they have produced a lot of tried to create some uniformity when it comes to tax compliance among the many states. That's about all I'll say. But suffice to say, a multi-state tax exemption form is a generic form that you can just check off what state it works in. Problem is, some states don't accept them. And that's where the challenge lies, guys. So if you're operating in a state, like we talked about with that hypothetical, where the vendor, the actual retailer, lacks nexus where the customer is, the vendor has no obligation to collect sales taxes. I mean, the state would like them to, but they can't make them. But the third-party drop shipper does have nexus where the customer is. Bingo. That's where a lot of the complexity lies when it comes to compliance with drop shipping. And the complexity is, well, wait a minute. If a third-party drop shipper can't get a valid exemption certificate out of the vendor, they're going to be obligated to collect tax on that wholesale sale, even though everybody in the whole circle knows it's for resale. Because of these administrative rules, there's no valid resale certificate that the drop shipper can accept. And naturally, the caveat or the final word on all this is, even in states where the drop shipping third party can accept an exemption certificate from a out-of-state vendor, the obligation doesn't vanish. The obligation shifts to the third part of our little party here today, the customer. But again, not our concern. That's up to the customer. That's the customer's tax compliance, right? Use tax compliance. In the states, the handful of states, guys, that don't accept anybody's exemption certificate but their own, and I can tell you California is a great example. Now we're talking concrete, no more hypotheticals. California absolutely is a state that will not accept any exemption form besides a California form. California has some pretty cool, cool if you're a tax geek, sorry about that, unique rules on, hey, so I'm in this situation, right, that I've described. So I'm up here in Edmonds, Washington. This time I'm using a drop shipper from California, having my items shipped to Florida. I don't have Nexus in Florida as the vendor here in Edmonds, but my drop shipper in California does have Nexus in Florida. No, let me switch that around. I apologize, you guys. I do this on this sometimes, and I apologize. No, it's when I'm making a sale into California. California won't allow a drop shipper to accept my Washington exemption certificate. So California says, hey, when you're making that wholesale sale, you need to charge tax on it. California has these crazy rules where they take the wholesale amount, take 110% of that base. So if you're a third-party drop shipper making that sale into Cali, you can't accept a resale exemption certificate from me because I don't have any Nexus in Cali. California says to that vendor, hey, to that third-party drop shipper, you need to take your wholesale price, add 10%, and charge tax to the vendor, to me up here in Edmonds. So think about that. So this is a wholesale sale that the drop shipper is making. Drop shipper likely is not heavily into the sales tax compliance business because most of their sales they're making are for resale. But under this scenario, specifically in California and a handful of other states, that third-party drop shipper is going to be obligated to collect tax on the wholesale sale that they make to the vendor. So if I buy the widget, I'm the vendor up here in Edmonds, and I buy the widget for $100 and I have it shipped into Cali and I charge my customer $200. If my third-party drop shipper has Nexus in California, has an obligation to collect there, they're going to have to charge me tax on $110, and that'll be the tax base. And the tax that is due is based on the customer's location in California. How about that? Most other states don't mess around. Of these handful of states that obligate the drop shipping third party to collect sales taxes, California is unique in that they mess with the base, that 110% deal. A majority of states in this handful, in this 13 or 14 that have these strange rules, will obligate the drop shipping third party vendor to charge tax based on the wholesale price, which I think is pretty intuitive, right? That's the price that the third party knows and understands. And as I'm chuckling, if you're predicting what's coming next, sure enough, a few states, Wisconsin in particular, obligate the drop shipping third party to charge sales tax based on the retail price. Now, regulations like this are often written by bureaucrats and agency folks that haven't spent a lot of time out in the, dare I say, real world. If you guys are thinking about this, I'm sure you are, you're thinking, wait a minute, how does the third-party manufacturer drop shipper know what the retail price is? And I don't have a great explanation for you. I can tell you that the states in rulings and publications, this small handful of states will usually allow some sort of reasonable effort on the part of a drop shipping third party to establish a tax base, perhaps a published retail price. But that leaves the drop shipping third party with a kind of strange compliance issue. They're billing a vendor for $100 wholesale for a widget that costs retails for $200. They must charge tax on the $200 in these handful of states when sales are made in these states. This is where the complexity comes in. I haven't even mentioned the word automation yet because I'm a tax geek working around a bunch of software geeks. But I think that by laying out some of these complexities and quirkiness, I kind of make the case for automation without really even mentioning it. So there's a lot of data here, right? These transactions, a drop ship transaction for sales tax purposes, may require understanding of taxability rules in a state where the customer is, but also understanding what the Nexus situation is, whether or not a vendor can offer a valid exemption certificate for that sale. And if a drop shipping third-party manufacturer, call them what you will, has Nexus in a state where a customer is receiving an item, and it's in one of these states that will not allow an out-of-state exemption certificate, that drop shipping third party has got some pretty serious compliance complexity on their hands. And actually, when you're talking about drop shipping and sales tax, guys, and hopefully that's becoming a little clearer as I slog through this stuff, that the complexity really ends up lying with the drop shipping third party, that manufacturer that's out there making these deliveries on behalf of a vendor. Depending on where they're making deliveries and depending on where their obligations are, they may find that they are obligated to be collecting tax from the vendor on sales, which, again, like I mentioned, everybody sitting around the table understands this is a sale for resale, but because of the rules, it's not treated as a sale for resale.
And Shane, we do have a question on that slide from Shannon. Thank you, Shannon. Sure. She is asking, so does Avatax take that into account for the supplying vendor if the vendor is using Avatax and has Nexus in California?
Avatax will take it into account, but it depends on the profile that has been entered into our system, right? So in other words, the setup is key. I suppose that's true of all these automated systems. But yeah, third-party vendor who's utilizing utilizing Avatax to calc sales tax, they're gonna the one thing I guess that Avatax can't do is determine the tax base, and that's why I spent a little time on that, right? That still has to be up to the third-party drop shipping vendor. And while I chuckled about it before, it is a serious concern, and that is, what's the tax base? What do I charge the tax on? The Avatax can't discern that. But otherwise, yeah, with the proper setup, Avatax will calculate the tax based on the customer's location, as long as you guys get the right tax base in there, and you have your setup right, meaning your Nexus, your appropriate Nexus obligations are included in your Avatax setup. So it's a combination of your ERP and the Avatax system. But Avatax will give you the right tax based on the customer's location, so long as you got your setup right. Meaning you've indicated the proper Nexus profile on the Avatax dashboard. And I can talk about the basics of Avatax, Adrian. I'm not sure, I don't mind digging into that a little bit. I don't want to bore you guys. If you guys all have a pretty good idea of what an automated sales tax solution looks like, I don't want to go too deep into it. But
well, we do have an elaboration on the question too from Shannon. We
sure.
have so if the invoice is $100 on my record, and I'm going into California as the supplier, will Avatax pop the 100 by an extra 10% and add that to my invoice price if I've noted it as a drop ship in California?
That's a great question, Shannon, and that is what I inelegantly was trying to get across, and the answer is no, right? Partially because California is the only state with this ridiculous rule, but partially because California also says if you happen to know what the retail price is, you can use that too, right? So California sets up from a sales tax, building a sales tax engine point of view. Here's a little inside baseball, right, guys? This is what I spend my life doing, deciding how the software should approach this stuff. And when a state does this, and they give us several options, we don't always programmatically pick a lane for our customers. And this is one of those scenarios. So not only is it a single state that has this strange tax base rule, California also has an alternative to the tax base rule, which says, hey, you can just also charge tax on the retail price. Now, like I mentioned before, I'm well aware that for a third-party drop shipper, it's not always easy for them to determine what the retail price is. However, I think even in California, if you dug deep, I think you could find resources. I'm not convinced in California, but I know in other states where they have similar rules, not the 110% rule, but the charge tax on retail price rule. They have publications or rulings that state, hey, if you don't know what your vendors charge the customer, which really vendors don't probably want to tell their third-party drop shippers what they're charging in most cases. I mean, why, right? There's no purpose in exchanging that information. The states will allow you to, for example, I think I mentioned earlier, go with a published retail price. Shannon, the reason I'm explaining all this to you is because Cali gives us different ways to do this. And so, no, we have not programmatically built into our system a dropship module which will alter the tax base in California for the reasons I guess I mentioned. Yeah, it's the only state that does it, and they give us options which sound a lot like the other states. Thank you. You helped me hopefully illustrate that point, and you got me talking about Avatax a little bit too, so thank you.
And Shane, we don't have any further questions at this time, so thank you so much for answering that.
Oh, I hope everybody's still awake. I appreciate it. You go ahead and give me some questions, though, if you'd like.
I will.
Now, one question that comes up, guys, so there's your scenarios, right? If a vendor has Nexus where the customer is, no problem. Vendor issues drop shipper, as both parties have Nexus where the customer is. Vendor issues third-party distributor a valid resale certificate for that jurisdiction. Third-party drop shipper ships the items wholesale with no sales tax. Vendor charges tax. The next scenario we talked about is vendor lacks Nexus where the customer is. Third-party drop shipper lacks Nexus where the customer is. And it's an easy answer. And the answer is no one is obligated to collect tax because neither one of them have Nexus where the customer is, and that's where the sale is taking place. Then we got into the more complex arrangements or potential setups, where the vendor lacks Nexus where the customer is, but the third party does not. And if the third party's got Nexus there, that's where these rules kick in. So that's the quick review. That's the 101 review. Now, one thing that has come up, is, and this is an added complexity. So hopefully you guys are keeping up. It's not very exciting stuff, I know. What if the customer says, "Hey, I got an exemption certificate. I'm a not-for-profit hospital, or I'm a Boys and Girls Club, or I'm a government agency, whatever, some exempt entity." How does that work? Most of the states, I think all of them, will allow the third-party vendor to accept a copy of the customer's exemption certificate in order to exempt the wholesale sale to the vendor. And I'll repeat that. In situations where the customer, the third element of our triad here, all of a sudden they pop up and say, "Wait a minute, I've got an exemption certificate." The states will allow a third-party drop shipper to get their hands on a copy of that valid exemption certificate in order to exempt the sale they make, not to the customer, but the sale they make to the vendor. That second sale of the two that happen, right? And we're reaching the end of this wonderful, exciting topic. This is the review part. If you guys have any questions, I'll take them. Otherwise, I'm going to talk to you a little bit about AvaTax. And Carolyn, I think you wanted to add a few things at the end, so you just speak up whenever you'd like to take the microphone. These are the takeaways, guys. There's 2 sales that occur. And remember, for drop shipping for sales tax purposes, this is the model that we're talking about. This is not fulfillment. It's not a situation where a vendor has their own purchased inventory sitting in someone else's warehouse in order for someone else to ship that stuff. And that's about as non-technical description as I can give you of a fulfillment by Amazon setup. That's not drop shipping for sales tax purposes. In order to apply these rules, you've got to have these 2 sales that occur. And I think this is still a pretty prevalent arrangement. I don't think the whole world's using fulfillment by Amazon, but the whole world seems to be talking about fulfillment by Amazon. And I've heard folks who probably should know better even refer to those arrangements as drop ships. And in some respects, they are. The stuff's getting shipped directly to the customer. But when the vendor owns the stock sitting in the drop shipper's warehouse, it's not a drop ship for sales tax purposes, okay, guys? That's just a regular retail sale. 2 sales that occur. It has to be for drop shipping. Once you've got this arrangement, then you need to look at these rules. And it went back to Nexus, which I'm sure that was the last thing, or maybe one of the last things you were hoping to hear about this morning, but it's important. It comes up all the time in multi-state tax compliance. And it's the Nexus status of the vendor, the retailer, and the Nexus status of the third-party drop shipper or manufacturer that needs to be taken into account. And the Nexus, the state that matters in our triad is where the customer is sitting. So if a vendor, my little e-com company up here in Edmonds, if I have Nexus where the customer is and I'm registered there, I'm just going to collect tax on the retail sale. And the wholesale sale to me will simply be that. I'll issue a valid resale certificate, from the state in which the customer is. The third-party drop shipper can accept that, or perhaps they don't have Nexus there anyways. They don't really have a concern over it. And they can ship that stuff to me wholesale. You guys, when we're talking about AvaTax and automation, I'm not sure what level of sophistication you guys have when it comes to looking at sales tax automation at all. Shannon had a good question asking about the capabilities of AvaTax. Understand that Nexus setup, profile, company connections are critically important in any of these automated solutions. That's the only way, and this is true whether it's Avalara or Vertex or Sabrix or any of these guys. The only way that engine's going to work is if the setup is correct at the beginning. And I can't reinforce that enough. And that's probably true in a lot of automated solutions that you all are working with every day, whether it's in the tax compliance field or anywhere else. But making sure that as an entity, as a company, you have a strong understanding in your Nexus profile, for example, understanding where you are obligated to collect, where you have activities to occur, so that when you do begin an automated solution for sales tax or for anything else, I guess, any other tax obligation, but we'll talk about sales tax today, that sales tax solution is only calculating tax in places where you need it to. So understanding Nexus profile, understanding where your company does business, where you have employees, what activities you do. And this is an ongoing process, you guys. This is something that companies really should do maybe semi-annually. Depends on the size of the company. The bigger the company, probably more often. Unfortunately, for tax folks, you're often the last to hear about what's going on in other parts of the company. And when I say what's going on, what I mean, guys, is Nexus triggering activities, right? They don't always tell the tax department that the salespeople have attended a trade show in Texas for a week. They don't often tell you that the IT department has hired some remote server guru to work out of his basement, in somewhere. But these activities are the things that trigger these obligations. Being a drop shipper or being a vendor who utilizes drop shippers just adds another layer of complexity to it. But you're not going to ever get your compliance straight, guys, unless you know where you're obligated to collect. And it sounds basic and elementary, and it is. For a little e-com company in Edmonds, Washington with one employee, it's pretty easy to figure out. But, when I look even at our company, the growth that we've experienced over the last, decade or so, well, it's come in all different ways, right? We've made acquisitions. We've hired independent contractors. We've got servers. We're a SaaS-based solution. We've got servers sitting around the country in a few places. All of these activities have, when I started with the company, guys, we were only obligated to collect in Washington. I was an early hire. And now I think we're collecting in just about every state. And it's not because we're a sales tax compliance company. We don't want to do it unless we have to either. But because of the changes that have occurred to our business, we now are obligated to collect all over the place. And I am turning this into a whole talk about Nexus, but it relates to the automated solution. And how it relates is you got to get this straight. You got to know where your obligation lies. Once you figured it out, you can get your engine set up so that you're collecting in the right places. Now, there's a lot of other steps to getting an automated sales tax solution to work good for you, right? You got to be able to have your ERP, your Enterprise Resource Program, and whether it's a home built or a shiny new toy from Sage or somewhere in the middle. It's going to take some work to get that connector to work. You're going to want the data to move across to the AvaTax engine. And remember, it's a SaaS-based solution, so it occurs over the internet in a split second. And you want to make sure that the information that's being transmitted to AvaTax is the appropriate information. When I say that, it's the basic elements of any tax call, right, guys? It's an origin, any sales tax call, excuse me. It's an origin address, it's a destination address, it's a dollar amount, and it's the other piece that I'm going to spend just a few minutes talking about, and that is once you figured out where you're obligated to collect, then you got to figure out what it is you're selling. And whether or not special rules apply, whether or not it's taxable at all, right? I mentioned the caveat earlier that for our hypothetical today, we were just going to assume my widgets were taxable. Now, this stuff is convoluted and complicated enough, but what if your widgets are only taxable in some places? It adds a whole other layer of complexity. What the software solution, at least AvaTax, can do for you via mapping to pre-existing what we call tax codes, which are basically a set of rules across the many states. You associate those codes with your items, your SKUs, or whatever you refer to as your product definitions. And that way, AvaTax has your Nexus set up appropriately. It knows where you need to collect. You've got your enterprise solution sending over the appropriate addresses based on the facts and circumstances of the transaction, including the price. You got quantity, naturally, I guess. And then you've got a mapping solution so that you can enter that SKU for that widget, and no matter where the sale occurs, the automated solution will apply the appropriate taxability. Most of the time, appropriate taxability means taxable or exempt. But sometimes, guys, it means a special rate applies because of the type of item. Sometimes it means a special tax base applies, meaning, data processing in Texas, only 80% of it is subject to sales tax. Well, AvaTax will take all those rules into account and apply them in the calculation to get you the right amount.
And Shane, we do have a few more questions.
Well,
Announce if I can.
I'm done. You go right ahead. I'll answer any of them that we have.
We have another add-on from Shannon from her earlier questions. Basically, that third-party location shipment destination owner's exemption would cover the vendor, manufacturer, as well as the supplier. In that case, right? So I don't know if you recall an original question, but she was talking about California.
Yes, as long as you're if the vendor has Nexus in California, meaning the vendor can issue a valid exemption certificate, meaning I shouldn't say exemption, guys. I use resale certificate. That's the appropriate term. Then everybody's covered. The vendor is obligated to collect retail sales tax on the retail price on the retail sale. So the third-party supplier simply makes a wholesale sale to the vendor, accepts the certificate, and does not need to charge anyone tax.
And then we have a question from Carla. Thank you, Carla. What if you have a second reseller in the mix, but still a drop ship from a third party?
Well, I guess we'd have to get the whiteboard out and diagram that out, maybe. And I'm only chuckling because yes, this stuff can get real complex in a hurry. Let me tell you this from a general point of view. For any sales tax transaction, there's one vendor and one vendor only. And whether or not there's a couple of a string, like maybe a referral, or a direction from one website to another, something of that nature, depending on the facts and circumstances of that transaction, one of those vendors is the vendor for sales tax purposes, and that would be the party that you would use to analyze these transactions. And I know that's kind of a generic answer, but that's the answer. It really doesn't change it, but appreciate that the reason it doesn't change it is only one of those retailers is the retailer for sales tax purposes. Typically, it's going to be the one who's collecting the money. Yeah. If there's a referral arrangement in there, it's possible that the little money's changing hands between retailers, but that is not going to alter the identification of the retailer for sales tax purposes.
And we did have a question from Shirley, but I think she had to leave. So I just want to make a note of that to follow up with Shirley. She had two questions. Can we talk more about automation? Will Avalara file the tax for us automatically, and will there be a report for the record? So I don't know if you could touch on that real quick here, closing. And I do want to it is at the top of the hour, and I would like to have Caroline kind of interject on how Starship and Avalara work together to update the invoice. So if we can just answer Shirley's question off the record, and then have Caroline go ahead and kind of talk to the Starship interface with Avalara.
Well, I'll turn it over to Carolyn. The answers to Shirley's questions are yes and yes. So there you go.
Perfect.
Thank you all very much for attending. I really appreciate your time today. Go ahead, Carolyn.
Thank you so much, Shane. You know your stuff.
Wow. Yeah. And I thought shipping was exciting. Hey guys, it's Caroline. I just wanted to thank Shane for putting this webinar on. It's somewhat related to the shipping application because we do have drop shippers out there on both sides. So I thought that might be an interesting topic for our customer base. But on the Starship side, we don't have a direct integration into Avalara, but our applications do work hand in hand because the Avalara solution will actually update the freight costs, update automatically in the order or the invoice it will Avalara will automatically recalc that if necessary, if there's additional taxes that need to be added to the freight charge. Because on the Starship side, we are just basically calculating the cost, with carrier. You can have your negotiated rate or the list rate and then can add custom freight rules on top of that. But once we update the sales document, that's when Avalara will come into play and automatically recalc the freight if necessary.
Perfect. So I do have a one poll up here on the screen, and I see that 39% of you have voted. And thank you so much for hanging on the line 2 minutes after the hour. There's a lot of information to digest. Thank you, Shane. You really know all the technicalities, and you have a nice way of presenting everything and making it easy to understand.
If you say so. Cool. Thank you very much.
So I'm going to go ahead and close this poll out and just flash the results on the screen so Shane can see. It looks like we have the majority of our audience are drop shippers, Shane.
Okay. Yeah, you guys are the ones that have got the headaches when it comes to this stuff, guys.
So, well, thank you so much, everyone, for attending. We really appreciate you spending this time with us. Thank you, Caroline. Thank you, Shane. And everyone have a fantastic rest of your day. Happy New Year.
Happy New Year, guys.
All right, take care.
Bye, guys. Thanks.